Well, good morning, everyone. Thank you for being here. Really appreciate you taking the time to join us today. My name is Alex Detweiler. I'm the VP of Credit and Underwriting at NEWITY. And today I'm going to walk you through two expansions of a loan program that we're really excited about, the Grocery Guarantee and the Made in America loans, both of which can unlock up to $1 million in SBA-backed funding for eligible businesses through NEWITY. Over the course of this webinar, I will cover what these programs are, how they may differ from our standards SBA small loans, who qualifies, and exactly how to apply. My goal here is to leave plenty of time for questions at the end of this because there still is some uncertainty around this program. So hold on to anything that comes up. I want to make sure that you walk away with everything that you need. All right, before we get into the products, a quick word on who we are, because it frankly matters when you're deciding where to get your capital. NEWITY is a fintech company built around one mission, making sure that small businesses have an equal access to affordable capital. We've helped more than 125,000 businesses access over $12 billion in SBA loans, and we've done it in a way that's faster than the national average, 3 times faster on average, with an initial application that takes less than 10 minutes. We're a technology-first lender services provider that specializes in both SBA and non-SBA products, which means that we know this space deeply, and we've optimized the process specifically for business owners like yourselves. Okay, so here's what we're covering today, an overview of both of these programs that I mentioned, how they may differ from our existing SBA 7A small loan program, which industries qualify, the financial eligibility requirements, and how to apply. So let's take these one at a time. All right, first off, the SBA Grocery Guarantee Loan Program. So in reality, this is actually an enhanced loan offering built on top of the SBA's International Trade Loan Program, or ITL is how we'll refer to it throughout this webinar. The federal government has created special lender incentives for industries tied to America's food supply chain, which means that we can offer higher approval rates through our lender partnerships than you typically see on a traditional conventional loan. So here are the key terms. Loan amount up to $1 million, broad use of funds, working capital, equipment, inventory, modernization of any existing equipment, production expansion as well. Just like with our SBA 7A small loan program, this includes a 10-year repayment term, which just lengthens that term and keeps your monthly payments manageable. An interest rate of 9.75% currently, which is the Wall Street Journal prime rate of 6.75%, plus a 3% premium on top of that. That is a variable rate, but the Wall Street Journal prime, you can look up, is not all of that volatile. So as far as variable rates go, it's not one of those predatory rates. So this loan is designed specifically for businesses in the food supply chain. I'll show you the full list of eligible industries in a moment, but if you're involved in growing, processing, distributing, or selling food in America, this program was built with you in mind. All right, the second program is the Made in America loan, built for US-based manufacturers. Like the Grocery Guarantee, this is also structured through the SBA ITL program, and it carries the same lender incentives that support higher approval rates. The terms are essentially identical to the Grocery Guarantee, up to $1 million in growth capital, 10-year term with the same interest rate, and a wide use of funds, working capital, equipment purchases, supply chain diversification, reshoring production, workforce expansion, and again, modernization, all things that are top of mind for domestic manufacturers these days. The key distinction here is the eligible industry set. This program covers NICS sectors that begin with 3.1, 3.2, and 3.3, which encompasses food and beverage manufacturers, textiles, paper, chemicals, pharmaceuticals, machinery, electronics, and more. Again, we'll look at that list in detail on the next slide, and I'll also cover later on where you can find your NAICS industry sector if you don't know where to find it. The through line for both of these programs is that they're not niche products. The SBA has deliberately structured incentives to support American food and manufacturing industries. And NEWITY has moved very quickly to bring these products to market. The ITL program has historically been limited to companies that are expanding their existing export markets. That's where the international trade piece comes from, or developing new ones. But there's also a carve out in the ITL policy that allows the SBA to expand this program to industries that have been adversely affected by import competition. That is where both the food supply chain and domestic manufacturing pieces specifically come into play here. So you may already be familiar with the SBA 7A working capital loan that is facilitated by NEWITY. So let me show you how these new programs stack up to that. Our SBA 7A loan program through our lending partner offers up to $350,000 with use of funds limited primarily to working capital through our specific program. Both the Grocery Guarantee and Made in America loans raise that ceiling to $1 million and expand the eligible use of funds to include equipment purchases, real estate, everything that I mentioned earlier. Importantly, the base eligibility requirements are the same across these products. A FICO score of 600 or above for all majority owners, 100,000 in annual revenue, and at least, this one is different. For years in business, we have 2+ years for our SBA 7A small loan program. For the Grocery Guarantee and Made in America loans, anything above $350,000 up to that $1 million cap will be 3 years time in business or more. So if you've ever qualified for our small loan program or come close to qualifying, you're likely in the right ballpark for these programs too. The real differentiator isn't the borrower profile, it's the industry you're in and the loan ceiling that you can access. Obviously, there are some differences around underwriting requirements, but our team is very well equipped to answer all of those questions as they come up. Okay, as I promised, let's talk eligibility by industry. And I want to be specific here because this is where a lot of business owners either self-select out too early or they miss the fact that they qualify. For the Grocery Guarantee, eligible NAICS codes include farming and crop production, animal production and support activities, farm and garden machinery and equipment wholesalers, grocery and related product, refrigerated warehousing and storage, and farm warehousing and storage, among others. You'll notice, again, this is not just producing food or selling food, it's everything in that supply chain from support activities to the machinery that harvests the food as well. So we really are covering that entire food supply chain. On the Made in America side, we're looking at NAICS sectors that start with 3.1, 3.2, and 3.3, which cover food, beverage, and tobacco product manufacturers. There's a tie-in with the food piece of this. Textiles, apparel, leather, and wood product manufacturers, paper, printing, and plastics, chemical, pharmaceutical, petroleum products, as well as machinery, computer, and electronic products. If you're not sure whether your NAICS code qualifies, that's okay. Our application process will service that within minutes, so please do not count yourself out before you apply. If you're not sure what your NAICS code is or where to find that, typically it can be found at the top of your business tax return. If it's not there, or if you believe that that's been filed in error, what I would do is just frankly Google your specific industry and NAICS code. That will pull up a list of potential options, and you can connect it to this list to see whether you could be eligible. Let's talk financial eligibility. So beyond your industry, here are 4 financial criteria that we look at for both programs. On the credit side, we want to see FICO of 600 or above for all owners with 20% or more ownership. This is a minimum threshold, and having a stronger score certainly helps, but 600 is the floor. That 20% piece is important here. Similar to our SBA 7A small loan program, the SBA mandates that any owner of 20% or more of the business must sign a personal guarantee on these loans. For business age, like I said earlier, we'd want to make sure that your business has been around for at least 3 years. This is a slightly higher bar than our small loan, which requires 2 years, so keep that in mind. On the collateral side, if it exists, it is required to be taken for these programs up to the loan amount. So that's a key component there. We're not going above and beyond whatever loan amount you qualify for. It's just up to that loan amount. And this is limited, again, to business collateral. What that specifically looks like will depend on your situation, and our team will work through that with you during underwriting. You will notice that I skipped over DSCR and left that toward the end because this is an important piece, and I want to make sure that I spend enough time on this. So DSCR, if you don't know, stands for Debt Service Coverage Ratio. Essentially, it's a measure of your business's ability to pay their debt obligations based on the cash flow of the business. So the required DSCR ratio is 1.15, and again, that's SBA mandated. In plain terms, your business needs to be generating at least $1.15 in net operating income for every $1 of debt service you owe. This is how we ensure that the loan is sustainable for your business and that we are not adding more debt to a business's books than they can service with their cash flow. These are SBA-backed programs, which means there's real structure around credit worthiness and other factors, but they also carry federal guarantees that make it possible for us to approve borrowers who might not qualify through conventional bank lending. Okay, we are to the application process. And this process is straightforward through NEWITY. That's very intentional. And here's how it works. So step one, navigate to portal.newitymarket.com. Step two, create an account or log in if you are an existing NEWITY customer. And step three, fill out the application. It should take less than 10 minutes, at which point you will either receive an offer, a pre-qualification offer, or a decline notice, and then we'll move you into underwriting from there. Within about 10 minutes of completing that application, you will know whether you pass that initial eligibility criteria. If you are eligible, our team moves into underwriting and works with you through the SBA process, which at NEWITY, again, we complete on average 3 times faster than the national average. If you have questions during the application or just want to talk through your situation before you apply, our team is available and ready to help. Once again, the link is portal.newitymarket.com. I'd really encourage you to take 10 minutes just to see where you stand. So that covers everything I wanted to talk through today. To recap, 2 new SBA ITL programs, Grocery Guarantee and Made in America. NEWITY facilitates each of these for up to $1 million at current interest rate of 9.75% on a 10-year term. These are specifically designed for food supply chain businesses and U.S. manufacturers, respectively. Same core eligibility thresholds as our small loan program with collateral required and a 1.15 DSCR minimum. And the application takes less than 10 minutes at portal.newitymarket.com. Genuinely proud of what these programs can do for businesses in these industries, as well as the hard work of our team to stand these programs up pretty much at a moment's notice from the SBA. $1 million at a competitive rate with a 10-year term is very meaningful capital, and we've made the process as simple as we possibly can. So question 1 to start out, when do these programs go live? This is something that I wanted to make sure that I address because there has been some uncertainty around this. The idea starting out was that these loans would go live in the SBA's compliance portal on May 1st. That was last Friday. We were at a conference last week, and it seems like that is now been delayed to the end of this week, mid-May. It is a little bit uncertain. So that's why I would encourage you to stay in contact with our team, follow us on our social media platforms so that you can get news about when these programs actually do go live. And one thing that I'll say is that even though the programs themselves are not live in the SBA's compliance portal, we can still accept applications, do preliminary underwriting, and get this process started so that when these programs go live for the SBA, we're ready to rock. Okay, number 2. Can these loan types be used to refinance existing debt? It's a big topic of conversation in the industry these days. Yes, absolutely. That is certainly an approved use of funds. The 2 caveats that I have are that not all types of debt are eligible for refinancing per the SBA loan or SBA loan programs. For example, as of last summer, I believe merchant cash advances or MCAs, as well as factoring agreements, are no longer eligible for refi through SBA loans. So if you have questions about whether some debt on your books qualifies as an MCA or a term loan or a line of credit, frankly, our team is very, very well versed in those details and can walk through to make sure that we give you the correct information about whether your existing loans can be refinanced or not. Okay, last question I received also was, where do I find my NAICS code to see if I'm eligible for these programs? Mentioned that earlier. Take a look at your tax return. It should have that industry code near the top. And if you believe that that is incorrect for some reason, or if it's not listed there, would recommend just Googling your particular industry and then NAICS code, and it should pop up with some good information to help you determine that. Okay, moving to the chat now. So first off, assuming an application is clean, what is the expected timing of getting an ITL loan funded of up to 1 million? Right now, again, the SBA, this program has to go live in the SBA's compliance portal in order for us to fully fund. What I'd say is that if it's a clean application, we can be talking in the 3 to 4 week range. This also depends on your responsiveness to document requests, things of that nature. If it is a more complex structure, a more complex deal, we can see something more in the, call it 6 to 8 week range. So overall range from probably 3 to 8 weeks, I would say. Okay, next, what collateral is typically acceptable? So what I need to make sure I say here is that the SBA loan programs are structured so that we will not, in all likelihood, decline an application for a collateral shortfall. What that means is that if there's available collateral to take in the business, so equipment, inventory, vehicles on the business, we would be required by the SBA to take those as collateral. But if it's an asset light industry, let's call it, so professional services, a law firm, a consulting firm that's not going to have heavy equipment, that will not meaningfully affect your application status for this program through NEWITY. Next up, do I have to pay off the current SBA program before applying to this program? Likely not. Really, if you have an existing SBA 7A loan, for example, that would be factored into your debt service coverage ratio calculation to determine eligibility. But there's no requirement that the ITL loan is the only SBA loan that you have. Hopefully that answers that question. Did I hear correctly that if we've only been in business for 2 years, we could still apply for the Made in America program, but would be limited to $350,000? So what I would say in that regard is we would probably send you the SBA 7A small loan route, where the requirements would be a little bit lower, like you mentioned, with the 2 years time in business, and same core eligibility requirements, all of that. But like you mentioned, you would be capped at that $350,000 amount versus being able to go all the way up to the $1 million cap. Okay, question from Stefano. Under the general 7A guidelines for our program, a merchant must not have taken an MCA in the last 6 months. If a merchant paid off an MCA loan or those MCA loans are older than 6 months from execution, does that make them eligible? This is a good question for the distinctions around timing of MCAs and whether they're still active or not. Here's what I'll say. If an MCA has been taken out by a business in the last 6 months, you'll be ineligible for our program. That's just a credit item that's in our policy, whether it's paid off or not. If that MCA is outside of 6 months, that's fine. If it is still an active MCA on your debt schedule, that will need to be factored into your debt service coverage ratio, just to make sure that that is, the full picture is being taken into account. If you have anything else that needs to be addressed, just as well, we have our team available at portal.newitymarket.com if you want to start this application process before the SBA goes live. But really appreciate all of you joining today. And that is all I have for you on this webinar. Really appreciate the time, and we look forward to working with you.